Good morning, everyone. Welcome back to the Bitcoin Treasuries Digital Conference. I'm Tim Kotzman. I'm here with Adam Back. Adam, thanks for joining us in the office today.
Yeah, thanks for having me on.
I thought we would start with kind of a fun, lighthearted question that actually comes from Ted at bitcointreasuries.media. He said, Adam, gets all of the serious questions, and he seems like a pretty chill guy. So why not have kind of a fun question to start us off?
All right.
So if Bitcoin were a sport, would it be chess, football, rugby, or something else?
Seems like it's a bit like rugby, maybe.
Yeah, what makes you say that?
Well, I mean, it's anti-fragile, so I like the Angry Hulk meme. The more you poke at it, criticize it, and attack it, the angrier it gets, the stronger it gets. So it's like basically indestructible. And closest sport to that is rugby.
Yeah,
burly, strong guys charging at each other and plowing each other down, kind of stuff. It's kind of like the UK version of American football, roughly.
You mentioned last night at PubKey that the "It's so over, we're so back" meme is quite popular these days.
I mean, it's a surprisingly accurate reflection of people's psychology, because you get what, if you go back 5 years ago, 5% wobble was normal volatility, right? But now, Bitcoin goes from 120 to 110. And people are getting depressed, it's over. And then it bounces back to 120 in the space of 3 or 4 days. And they go, oh, we're back, we're so back. And then they're wondering, we're getting a new all-time high. So, yeah, it's... I need to think a bit longer term, maybe.
Yeah. If that, without getting into silly price predictions, if you had to be on a side of like Q4 of this year is a blow off top, and then we have years of a bear market versus more of an extended cycle or a grind higher, or like everything's curving up and to the right when all the macro guys are putting out great content, I guess, which side would you lean to, or is it more nuanced than that, or different?
Well, if you zoom it out a bit, like a year or two, it is looking a bit grind higher, like, right, at that kind of scale. Kind of fairly steady and up to the right with like a little bit of volatility on top, but not as much as historically. So, yeah, I mean, no telling that there would be an end to bear markets, but it seems like the dips are a bit smaller than in prior cycles, and you've got new types of investors coming in. So I think, the ETFs. So Eric McCormick, ETF expert, said that the ETF buyers are surprisingly sticky. They buy and hold, even will dip a bit. And so if you the market structure is partly governed by the average makeup of new investors. So if you get a lot of retail investors who will panic sell on a 5% drop, that will help the drop, right? Plus all the leverage that comes in typically with the derivatives market. So I think the ETF buyers are a good part of the market structure, and the treasury companies are actually very good generally because they buy and hold. They typically market that they're not going to sell. If they do say they would sell, it's really just if they feel that their MNAV is unfairly priced, and they signal to the market they're going to buy back their own shares, and then just that information will probably change the price, fix the MNAV. It's in their advantage to buy back their shares in terms of the North Star Bitcoin per share anyway. So if the market doesn't react, they're very happy to buy the shares, right? So I think that kind of buying is incremental. Doesn't affect most companies, very few below 1 MNAV. And as Pierre Rochard's observed, an interesting comment that the treasury companies are Bitcoin's price shock absorber, because if you get into a bear market, the Treasury companies can trade down, but they won't be selling Bitcoin, because they've structured their whole, corporate cap table, types of debt, types of converts around avoiding that. And I think the bigger ones, of course, have been around longer, have got maybe stronger financial teams to be prudent about that. So I think they are actually just hoovering Bitcoin off the market. That's generally not coming back. So yeah, I think that those inputs, and plus, of course, sovereign wealth funds, pension funds, none of these are day traders. They're not leveraged day traders. And interestingly, they are also, most of the institutional interest is focused on Bitcoin, because for the same reason that, and about a third of the ETF volume is apparently institutional as well, 2/3 retail. Retail, different segment of retail, right? You got the first wave, which is people that will buy on a Bitcoin exchange, second wave, people who bought in the ETFs, and third wave, the actual direct, the institutions, whether they buy via a qualified custodian or via an ETF. And so this third wave is, the second and third wave are far less interested in day trading, volatility, speculating on altcoins, because they are typically longer term value investor types of people, particularly the institutions. So I don't think you're going to see the sovereign wealth funds, the pension funds, buying the ever-changing sea of speculative altcoins. And so you see also the Bitcoin market share, the so-called dominance index, actually going up. I think that will continue into the foreseeable future. So I think all of those things are probably more on the side of a grind higher or smaller pull downs side of the story.
Can you walk us through kind of how you've seen the journey of Bitcoin treasury companies to date? You certainly and obviously had MicroStrategy, now Strategy, start this emerging new industry, but it's been very iterative, right? From we'll do converts to maybe don't do converts to preferreds now, and we can talk about digital credit, but what's the solution to some of these pipe unlocks that we've seen? And is there a better, smarter, faster, stronger something way to go about these things? Or is it just hey, bite the bullet and turn over the shareholder base? Or just from a macro lens, I guess, however you have think through this journey so far?
Yeah, I've been an investor personally in treasury companies since relatively early in MicroStrategy. So I kind of I always think you're going to get to grips with and understand something better if you've got skin in the game, and you've got a reason to research, a reason to read the news, a reason to muse about their strategy and their explanations of why they're shifting strategy. And MicroStrategy has been quite good for that, because they've been very transparent in explaining their thought process and they're really learning as they go, but they're explaining their learning process. So that's pretty instructive. And as you said, they started with corporate bonds. They started by buying Bitcoin as a treasury asset to stop the melting ice cube, i.e. the super high QE-led inflation during COVID, right? And they were concerned that their 500 million cash reserves that they'd spent decades building up would shrink at 10% a year, which is a huge proportion relative to the speed they could accumulate it via their operating business. Very stable operating business, but not very fast growing, right? So you can see that be a particular concern to them. And to any business, frankly. And so you could see that Bitcoin was the inflation hedge. And I thought that was interesting enough, but I thought that was, probably most of the audience and myself thought that was the end of the story.
Mm-hmm.
But as soon as they'd done that, then they start buying more corporate bonds, and then they went on a kind of rampage. Every time people thought they must be tapped out, they did more, right? And they just kept going right into the bear market. Actually got a bit over leveraged. They were sort of their debt levels were above the Bitcoin NAV for 5 months. The first bear market, they're the oldest ones, and the first one that's really been through a proper bear market. And they of course they survived because that wasn't a direct lien, right? They had the equity cushion, they had super long-term debt, they kept paying the interest rate, they had no problem paying the interest, and so they just rode it out. And I think ultimately that sort of high leverage gave them a false start when it paid off, right, into the next bull market. And then, of course, over time they progressed to convertible notes at the market selling. And then most recently, the very interesting preferred lineup, right, where at this point they have 5 different variants of preferred, the convertible preferred and different risk profiles of dated preferreds, and the stretch, which is kind of more like targeted to be like a money market, so you could sell it in the market at any time and get your capital back, whereas something that has a fixed interest, when the interest regime changes and it's long dated, that could move the price around quite a bit naturally, right? So I think stretch is designed so that you don't have this kind of long-term bet. And of course, the very interesting thing with the preferreds is they have put a ATM on top of them. So once they get enough volume, they're clearly hoping that they will be able to, not have to go through the bank institutional money raising process, but just sell, create and sell using an authorized partner shares into the market, which will give them very scalable and low overheads kind of capital raising capability. And so, of course, that takes a bit of time. And I think Saylor has been interested to see more issuers of preferreds. So Metaplanet is talking about it. I think one of the miners might have made a preferred. Do you remember? Not sure which one, but I think there might be another preferred in the market.
Yeah, I know Strive has publicly said that they are
interested.
Yeah.
Yeah, I think, and then of course BSTR or B-Star, some people like to call it.
I like B-Star.
Yeah, actually, one of our guys said B-Star. I was like, wow, okay, that was good.
Yeah.
Yeah. So with B-Star, we are during the fundraising process with Cantor. Of course, they've done a lot of the instruments for MicroStrategy and others, so they have, perhaps the most volume in that sector. We were able to bring a convertible preferred to the market during the outset, whereas MicroStrategy took 4 years or something to get there, right? Because they went through that whole sequence of bonds, converts, Bitcoin secured debt, ATMs, and then finally the preferred. So we were able to bring a preferred. We bought, of course, a normal equity pipe, 200 million Cantor, CPO, so the C is Cantor, right? So it's a kind of in-house SPAC and equity pipe, and then a Bitcoin denominated equity pipe, which brought in 5,021 Bitcoin. The 25,000 Bitcoin that came in the new code. So that's from myself and some early Bitcoin OGs. And then the convertible preferred we mentioned, and some convertible notes as well, and some shoes on top of the convertible notes. So the whole process took 36 days end to end, and so it's very compressed. And it was getting kind of extended and upsized, so we stayed through a weekend. We were doing it in the Cantor office, so myself and Sean Bill, the CIO, and on the Monday after that weekend, we had 21 meetings, no joke. Starting at 8 a.m., half an hour all day long, no lunch break, no buyer break. It's taking turns to, grab, eat some sandwiches quickly or something, right?
Are these Zoom meetings? Or
yeah, all
person?
Zoom. It's
okay.
all done with Zoom now,
Yep.
And interesting conversations with the investors, of course. All of the the materials that are used in those investor meetings are what is filed with the SEC. That's part of the process. People can look at that on the website and follow the link to the SEC site. And so I think when it's all told, we're around 1.3 billion raised, plus up to 200 million from the SPAC, depending on the redemptions. And I think that raise is about 2 times the size of the nearest runner-up in terms of capital raised, separately from what came in with the vehicle. Right? So we were very pleased with the outcome. it got upsized, I think, 3 times or something during that process. So it was outperformance from what we would have, what we went in targeting, basically.
Is there anything in the B-Star presentation that you think is kind of overlooked or underappreciated, or that should be kind of highlighted?
Well, I think that we are, there are some differences of what we're doing. So about 2/3 of the capital that came in is Bitcoin capital. So most of the SPACs, with perhaps a couple of exceptions, were coming to Wall Street to raise money with a pipe and converts, buying Bitcoin with the institutional money, and then marketing the result. Put together a business model, put together a management team, and marketing the result. Where what we were doing is bringing the Bitcoiners, the Bitcoin, literal Bitcoin early investors, early individual holders in the Bitcoin equity pipe. Though we didn't anticipate it, some fund managers that are US domiciled that had Bitcoin evidently in their fund. With the Bitcoin equity pipe, we also had a in-kind mechanism, so a way to put Bitcoin into it, potentially with early cost basis, without triggering a deemed sale. So it's using an Up-C structure as some kind of tax-deferred mechanism. People would have to talk to a tax advisor. I think that generally is going to be appealing to a US investor base, but probably not work internationally, as it's country specific. So I think that's a quite interesting formula in itself, because if you do an investment in a normal way, you get, if you get a deemed sale, and you've got a tax liability now, and then you have to sell more to come up with the money to cover the tax, and that's a bit recursive, right? So already that will create a tax hit, and then presumably you're buying something in hopes of capturing the upside. And then if you later sell that and convert it back into Bitcoin, you'll get a compounding tax hit with the same properties that you have to sell even more to cover the tax hit, and then it's compounded on top of the previous one. So if you do that kind of compounding, sort of double compounding tax structure versus, roll Bitcoin in, retain the cost basis but no immediate, and then later sell, hopefully at a higher price, then it's much more tax efficient. And of course, if it turns out to be the case that the B-Star shares, are enough higher that it covers the capital gains hit, it could be a way to, get a effectively low tax treatment on some early Bitcoin, combined with a treasury company play. So we think that's interesting, and of course at this point, the other thing that's, I think, different, and we've seen other people start to say similar things, so I think we may have been on the forefront of it, is that we're also bringing hedge fund management experience and institutional money management experience in the form of Sean Bill, who has a long career, a couple of decades in hedge funds, debt funds, some experience with Bitcoin dating back to 2015 on a personal basis. Then did a stint more recently at a pension fund, and that was the first US public pension fund where he was the allocator to get Bitcoin onto the balance sheet, and then came across to Blockstream from initially Blockstream, and then BSTR, B-Star, from another debt hedge fund, which was an award winner for 2 years in a row. So we've got the kind of institutional experience in-house and different advisors that we think we're well placed to actively manage Bitcoin, which is the punchline, right? So using low risk asset management techniques from a steady pair of hands with decades of experience doing that for large pools of capital, and in an environment where you are responsible for billions and tens of billions of other people's money. In that pension fund, that's public money, right? It's the Santa Clara VTA, which is a large transport worker pension fund, for example.
I'm just thinking of Alexander Lise. he often says something to the effect of he's 121% focused
Right.
on Bitcoin, Bitcoin per share, everything Bitcoin.
Yeah.
How are you? How would you say you're splitting your time or allocating your time these days? Is it 100% to Blockstream and BStar and 21% to the on top of that to the Bitcoin community? Because you've been very gracious with your time at conferences and appearances. So just curious. I think people might find it interesting just how you think about allocating your time, because obviously you are responsible to certain things.
Yeah, I mean, it's all about Bitcoin, right?
Yeah.
So, historically, I've been investing in Bitcoin and Bitcoin treasury companies myself since 2013, and treasury companies, of course, more recently. And Blockstream itself is a company with a lot of different sub projects which have their own technical and project management teams. We have a good C-level management team at the top, so I am not really the project manager or the operations guy, right? I'm more the ideas guy in that company too. And in BStar, Sean Bill is the steady pair of hands with institutional investing. Plus, myself and some of the founders in BSTR and Nuco, which is the company that gets merged into the SPAC on regulatory approval. We also have a lot of experience in the Bitcoin trading environment going back years. So I think between that, we can do something interesting in the active management space between low risk yield strategies, which I've been running variants of myself for many years, and combine that with Sean Bell's institutional experience to institutional grade handling and risk management on top of that, and then hedged multi-strat alpha strategies basically. So I think with those we can do some interesting things, and it didn't take long after we said that to see a few other companies say similar things. So evidently the market's heard. I noticed even MicroStrategy was saying something active recently. So I think that people are realizing the market wants to hear additional revenue drivers from operating businesses or from asset management.
Got it. I'd like to bring in Ed. He's backstage right now. He said he has a few questions. Let's see. And also Soleil is here.
Oh, it squeezed you.
Morning, Ed.
Unfortunately, now you and Adam. Yeah, let's go to Adam. When you
that's okay.
Squeeze him there.
Yeah.
Yeah. Good morning, Adam. I always joke with you every time I see you, because I probably met you about 20 times, but each time I meet you, you got this look on your face like, I meet hundreds and hundreds of people every week, and I know how that is, so no problem.
I'm pretty good with faces, so people will say, you probably don't remember me, and I'll say, yep, I saw you at this conference, I remember you.
Yeah, exactly. Non-treasury related, but just something I've kind of always wanted to ask you. When you first saw the white paper, when it first came, did you get it through the mail list, or did somebody send it to you? Or tell us about that first 10 minutes when you saw the white paper and what it meant to you.
Yeah, so I got it from Satoshi Nakamoto. So I got the first email that Satoshi Nakamoto sent to anybody, at least under that pseudonym or what have you. And I was one of the people that was working on researching electronic cash protocols, going back to Hashcash and DigiCash before it, and B-Money and Big Gold. So I was talking with those guys and trying to brainstorm how to make a decentralized electronic cash, and Hal Finney as well. I was talking with him over the years. So I think my reaction was that that Satoshi had found a new solution that that everybody else had missed before in making decentralized electronic cash practical with less human involvement. The previous systems required super nodes or groups of humans to set the difficulty and things like that, right? Or to market to do something complicated. specialist markets to even decide what a coin is, right? So effectively, he'd done something interesting, and so the question to my mind was, will it bootstrap? Will it take off? Because there are lots of kind of internet protocol ideas or alpha software that are interesting to researchers, but don't necessarily take off in a market sense. So, and then the other reactions were really about the properties of Bitcoin. So the previous electronic cash systems that the cypherpunks at least were trying to find a decentralized way to repair were extremely strong on privacy. And Bitcoin didn't really have that. But for myself, I kind of adapted to that pretty quickly to say, well, okay, it's less private, but it's decentralized, and that's what went wrong with the previous system wasn't it wasn't private enough. It was too centralized. So that counts for more in a way, right? And so I set about later trying to improve the privacy, which is where the confidential transactions feature that's a Bitcoin layer 2 called Liquid came from, that Blockstream later implemented. But that was the reaction, and the academic reaction was far worse. They just basically laughed at Bitcoin and didn't take it seriously until it started to win in the market, and then they belatedly stopped laughing and started learning how it works in more detail and writing systematization of knowledge papers, and then more useful papers. So
yeah, it's funny. I lived in Mexico for 13 years, and people say, well, when did you know you could speak Spanish? And it's just like, I don't know, it was a Tuesday. I don't know. It's just, there's like all of a sudden I think that's the same with Bitcoin. People say, oh, when did you get orange pilled? And I'm like, it was a process, right? I mean,
yeah,
I bought my first Bitcoin in 2011 on Mt. Gox, but it was just gambling. I don't know what I was doing, right? And then it wasn't until 16 or 15, I get the dates confused, when Michael Tidwell in Atlanta showed me the code and how it works and stuff. And having been a coder in the past, that's when the light went on for me. So I was just always curious if you had an aha moment, if you kind of leaned back in your chair and went, wow. But it sounds like it was like, okay, there's another step. And then as it built out, it became more like, okay, this is really it.
Well, I mean, like everybody else, I have my regrets, right? I didn't really start mining or buying until 2013, even though I knew about it from 2008, August 2008. And that was really because of kind of waiting for the market to, show evidence of life. And I think that was basically happening in 2013 when the price crossed $1 billion. It's kind of hard to argue with that, right?
Yeah, cool. And then, well, now my other question has escaped me, but Soleil, I'll let you take it. I just wanted to throw in that one kind of historical tidbit there, but great talking to you again, Adam.
I should have said market cap, not price. There were 10 million coins, then it crossed $100, so now it's $1 billion market cap. Yeah, sorry, go ahead.
Yeah, you want to pop me out, Tim?
Yeah, I think it's kind of crazy that even Adam Back says he wasn't early enough. Like that's kind of crazy. Yeah, thanks Tim for letting me come on, and I'm super excited to talk with you, Adam. And I'll try not to embarrass Tim too much and fanboy too hard, but I think that with Bitcoin treasury companies now, I think Michael Saylor said that the war for the future of money will be won with money. And now that Bitcoin treasury companies are on the battlefield, do you think that they have a responsibility to be aware of the upcoming code changes and do research and make recommendations to their custodians about what code levels they want to run?
Yeah, I mean, I think, of course, this particular code change is policy. So effectively, it doesn't really make much difference what you run. I think you probably want to focus more on security as a custodian, right? So that generally means the code base with the most review on it, or if you want another code base, the one with the least possible changes, right? So generally the custodians and exchanges and ETFs have internal experts or technical advisors, and so they are doing more sophisticated things than people expect. Like running multiple versions and checking they behave the same.
Mm-hmm.
Contracting somebody to look at, the Bitcoin development process, there are multiple people looking at each and every line of code change, right? So, they will, in some cases, contract somebody or have somebody who will repeat that exercise, look at every line of code change and see for themselves that there's nothing that, that they can see that's wrong with it, as well as, of course, the global review process from all the technical eyes looking at it. The technical eyes looking at it are not just developers. There are lots of not developers are actively working on the project, but there are lots of developers. Like our last guest there was saying that he's a developer, right? So he might look at it, might read the release notes, he might look at something that he thinks is interesting to see what that specific feature does. And so there are lots of eyes on it, and there's a 2 trillion incentive to don't trust, verify, check the code, right? And the other thing people sometimes miss is that Bitcoin works by an IETF-like technical change process. So that means that anybody with a technical objection, valid technical objection, can put it forward, and assuming that other technical reviewers agree that it's valid, that it makes sense, that it's actually a risk or a bug or something, that will pretty much veto and halt any feature until that's resolved. Now, of course, some things are not really fixable, like spam on the internet. Like there's been spam on the internet since the internet existed, so you can't necessarily expect to halt a release if you say, halt the train, there is spam on the blockchain, because there's been spam on the blockchain since, I don't know, probably 2009, right? Satoshi put a bit of spam in there with the Genesis quote, if you like, right? So I think that was technically in the Coinbase, which is a kind of takes space even if you don't use it, so that's probably a little different. But so I think that's like a little bit of a different flavor at the moment. So, and of course the internet is a permissionless place, right? So if you and I want to run a different piece of software, we can do that, and we should be happy that we can do it, because we get to express our individual preference, right? And there's nothing we can do about it if we don't like the other piece of software. So I think most people have a kind of laissez-faire attitude, right? Live and let live. If somebody wants to run some software, even if they don't agree that that's the right software to run, they will fight for your right to do so, right? Like free speech. I think the only area where it gets a little funky is where it comes to defaults, So defaults carry a bit of weight, and there is, a reference client, and it has default. So effectively, people are not content to live and let live. They want to fight to make their preference the default, to try and push their preference on other people. And that's, I don't know. I'm not sure what you could do about that, other than maybe, make a client that has a splash screen when you start it and forces you to make a choice, right? But generally,
like a character selection screen.
Yeah, right. Do you want to prioritize for fighting spam, or do you want to prioritize for decentralization, security, robustness? So, faced with a choice, I would go for the second one. But some people want to try the anti-spam, and I think pretty much everybody dislikes the spam. So, really, the battle is not about the mission or any disagreement about spam being, a waste of resources and not really helpful for the Bitcoin mission. Like with the forks in 2017, the forks that got spin off in 2015 to 2017, Bitcoin Cash and all the rest. Some people thought, oh, great, free money. They sold them and bought more.
Yeah.
Bitcoin. But actually, I would say every dollar that was received was not free. It was paid for with, brand damage to Bitcoin from confusion from all these forks, and the drain on resources from the distraction factor of all of the arguing about it. So In the spam case, there's no, it's different, right? There's no fork. It's just what you run on your own node. So people can completely coexist with different code. And most of the impact of running anti-spam code, which does, slow your node down and create extra overheads, it's mostly felt by yourself, right? So if you want to, buy a faster computer or something and run it, that's up to you. So I think it's a pretty permissionless environment. Yeah, and I think the other thing that's kind of overlooked is, or not, I should say that, these things are very complicated mixture of economic game theory, like markets, like the spam market is like other markets, is complicated to think about. Everything that you might change has second and third order effects. So you might say, if we do X, the spammers will do Y, and you might be upside down. They might actually make it worse because you didn't foresee what their reaction would be, or you guessed wrong, or something like that, right? So you got the economic effects, you got technical effects in terms of how it affects network efficiency, and then you've got social effects where people are angry about spam, and that, I think, is most of the people are angry about spam. So there's not even any disagreement about it, other than the spam industry,
Right.
of course.
Yeah.
So really, what you're down to is a kind of tussle between people on the same mission who are annoyed about the same thing, about what tactic to use to best combat the spam. And as is actually common, people who really care about an issue, about a mission, have a fiercer argument with their compatriots about how to address the shared issue than they do with enemies about who don't even care about Bitcoin, right? So it's just a kind of factor that, and I think also people shouldn't really worry about it in the sense that, it's unlike other things with, PR firms and marketing departments and CEOs, like many of the altcoins. They can present a smooth sailing picture because they're having their fights behind a closed door. With Bitcoin, there's nobody in charge, so all of the trade-off discussions are happening in public. So, what looks like an intellectual brawl is just the side effects of decentralization, basically. So it effectively makes Bitcoin stronger because the battle of ideas, right? And some of the things may not even necessarily have a right answer because you can't necessarily predict risks or the market or the network behavior entirely.
Yeah, there's one good outcome maybe of this is tons of new people are running nodes. Like I was, stacking sats for quite a long time and just recently decided to run a node. But you mentioned the code, and it occurred to me, like, people like to say we're all Satoshi, and I thought, AI is getting so good at coding. Do you ever see a future where like we're all developers? Like literally every person on the planet can just go to AI and say, hey, I think I can figure out how to fix a certain bug, and like we'll have 8 billion developers, making sure that Bitcoin stays secure.
There is some things you can do with AI, but I think they tend to be a bit on the simpler end of things, where it's not very important if it goes wrong, like, making a website with, some JavaScript on it or something, but, the vibe coding thing. But there is use from using computing assistance to security. So, for example, so people think of the Bitcoin project as a monolithic thing, but actually it's dozens of not-for-profits and a few companies and volunteers all around the world sitting in different offices or working remote. And then the release process that becomes the Bitcoin release is actually, just assembled from the recent activity of those different projects into a release. But there is, those projects are working on different things. So like localhost in the Silicon Valley is focused on the Bitcoin QT, or Bitcoin command line embedded wallet. So they're working on improving the wallet, and that's what they focus on, right? And Brink, which is actually based in London physically in the UK, is focused on security fuzz testing. So fuzz testing is basically some specialized knowledge. They've hired a number of PhDs as interns and are looking to get financing to step that game up. Are with expert human knowledge steering computers to exhaustively test the software for edge cases, and you can throw enormous amounts of compute time at that if it's steered correctly, because you can't brute force it because it's too big. But a fuzz testing with human intelligence can sort of target it on the risk areas somehow, and that does occasionally find edge cases and things that need fixing. So I think more of that kind of security testing is good. So there are places where computing resources can help quality, and also the libsecp library, which is the kind of cryptographic library that does signatures in Bitcoin. Blockstream has a strong research team that does a lot of the work on that. And one of the things we did was to mathematically prove the correctness of critical pieces of code, which is a different kind of computing activity, right? To have a computer formal proof system help you prove it's correct, prove the code is correct, basically.
Yeah, I think that's pretty cool. So as far as like the battle testing and unintended consequences, do you think that the Taproot upgrade was, some people will call it a bug and say that that's kind of what amplified the ability for spam to occur? But I mean, I'm not technical, so I have to ask this question. Like, can something like that just be patched or backed out even? I kind of feel like an imposter in the IT space because I did work in IT, and when we would go live with a project, we always had like a go no go plan and a back out plan.
Right.
So can those things just be backed out or patched?
Well, I mean, I think firstly it's not really a bug because what it's saying is, and some WAG submitted a common vulnerability, a CVE report on the NIST site.
Mm-hmm.
That people are taking it seriously, but you could go on the NIST site and make a bug report on anything, and then it becomes the vendor's job to delete it. So they're not really screening the report; they just leave it there until the vendor goes through the process of getting it deleted. So I think people will get that deleted. It doesn't make sense. The claim is that somebody can hide data in code, and pardon the French, but no shit, you can hide data in any programming language ever invented, right? So that's not a bug, definitionally. And now, of course, you don't want people hiding data in code because it's very hard to combat, because there are an infinite variety of ways you can hide data in code. So if you write a filter to block one, they can change it, and if you block that one, they can make it much harder. They can make a polymorphic code that changes every time they send something in it, and then now you have to start applying AI, and you can't apply AI if it has false positives. So it gets real ugly real fast. So I think the best bet is to somehow find a way to incentivize people hiding data in a blockchain to stop that and put it in an op return like structure, because that you can filter based on size. Filtering based on code is like a very risky area. And then in terms of potential to back out, I think a lot of people would assume that to disable a new signature format requires a hard fork, but it actually doesn't. You can do that with a soft fork. But you've got to be pretty careful about that, because people have got a lot of money parked on it, and you can't freeze their money. I mean, that's a pretty central piece of Bitcoin, to not freeze people's money by side effects. And so, yeah, I think you might be able to, but as I say, I don't really think it's a bug. And I mean, one thought exercise to explain why it's not a bug as well is that, that same mechanism of hiding data in code would have worked with SegWit, Taproot came in 2021, SegWit, I think, was 2017, and you could hide code in that too, hide data in the SegWit code, you could hide data in the previous code, you could hide data in op returns back to 2014, you could hide data in fake pub keys back to 2009. So it's more of the spam exists on the internet as long as the internet's been around, and that applies to all protocols, including Bitcoin. So, of course, it's nice to sort of find a way to create an incentive for people to, BitMEX research, Johnny Beer posted some thread yesterday or the day before of a 2010 Bitcoin Talk Forum discussion, which sounds exactly the same as today's, right? It's like, the spammers could do this, the spammers could put illegal content in here. What about this? What about that? And the upshot of it is that they introduced the policy. Before that, there was no policy, only consensus rules. And, the 2014 discussion about adding op return was trying to give these spammers somewhere less problematic that could be pruned from the memory cache to put the data, simply because they'd spent the previous 4 years trying to discourage people, and it didn't seem to work, right? So when you end up fighting the free market, you tend to lose. That's the problem, right? So there might be ways to improve on that, but it's not easy.
Yeah, I'm struggling with the free market aspect because I'm all of my, I guess, opinions on this are libertarian, property rights, freedom of association, and kind of game theory kind of aspects. Mm-hmm. But Bitcoin solves the Byzantine generals problem, but I'm struggling to figure out how spam and, I guess, spammers fit into that, because it seems like they're a parasitic actor. They're outside of the network and they're attacking it. So there's really no, the Byzantine general problem doesn't really work on them because they're outside of the network and attacking it, and we have to defend ourselves from it in a way that the free market doesn't seem to have a solution for.
Yeah, I mean, I think, there, of course, so what we're talking about as a baseline is that, spammers on the internet, we don't seem to have ever managed to solve it, but we don't give up, we try, right? And so that's people's intuition. Well, it's hard, but we should try, right? But there's an additional problem with Bitcoin, which is the Bitcoin network architecture is designed to be censorship resistant. So it's much harder to control spam in Bitcoin because the network can't really distinguish spam from transactions. It's neutral and it doesn't understand. It's a computer, right? So that means that it appears to me, after noodling on it for a little while, that there's some kind of inherent conflict where we want Bitcoin to be censorship resistant, but to the extent that even if we could succeed at controlling spam, we would, I think, almost inevitably have weakened Bitcoin censorship resistance, which is, one of its most key properties, shortly behind, 21 million supply cap, right? So we've got to be careful what we wish for, because, you can see actually a prior precedent of this very situation, which is email spam. Go back a few decades, a lot of people ran their own SMTP email servers, and I used to run one. And then the spammers would create a lot of problems, and so there were new features and protocols introduced to control spam, and it made it harder and harder to run a mail server because it became a lot of technical work to keep your mail server running so that you wouldn't get cut off from the network by other nodes or bigger mail servers that demanded you keep up with ever-evolving set of anti-spam tools. And so ultimately what happened is we lost. Like the spammers, I don't know if the spammers won, but the people that cared about the self-sovereignty of running their own mail server and not have, people, so it ended up in the control of Google and Hotmail and all those kind of things. And it turned out from Snowden's disclosures that they just shared it all with the NSA. So we all lost, right? And effectively, if you're running your own mail server and it has SSL, you receive a message, nobody sees it apart from you and the sender, and if you delete it, it's gone. That's all lost if it's in the cloud. And so, that's a story that we can draw from, that if we get too far down the road of prioritizing combating spam above decentralization, that we can end up with, not with the nodes and the filtering and the transaction submission going via big pools, big wallet backends, and before you know it, Bitcoin won't be censorship resistant. So it can still be digital gold, but it'll feel more like PayPal, which is your stuff can get frozen randomly, and that's not what we want, right? So we have to be pretty careful about how we combat spam, or how we try to combat spam. I mean, it's hard to actually impact it, right?
Yeah, I mean, I think some people even say it's hard to define it, but
I think a JPEG is spam, personally.
yeah, I think that's pretty obvious. Like, if you think about the attributes of money, right? We got immutability, fixed supply, divisibility, all those things, and morality is not an attribute of money. So when you introduce a moral hazard, like, okay, here's a picture, and anyone can decide this is a good picture or a bad picture. So I think it's just kind of obvious that anything that introduces moral hazard is not a financial transaction. I mean, can we just make it possible for, even like nodes that are not run in prune mode, like just all nodes, can they be prunable, or is that screw up our censorship resistant theory?
That's one of the topics of discussion, whether there could be a new feature to allow nodes to delete op return type data, like some kind of new field, so that it's sort of opt in or opt out, keeping it. It's a little tricky because you don't want to create a risk, like a soft fork risk. I think because you're running nodes, that if one of the reasons to run a node is that if there's a contentious fork, like happened in 2017, you're actually part of the solution to don't trust, verify, and stop that by running a node. That's kind of the the culture of being a node runner, right? That you're the guardian on the wall to stop that happening and sound the trumpet and like call the rallying troops if it happens. And so if you are running SPV, so like you didn't upgrade your node, you might not notice some things, or you might accept something that's not valid under the new rules after a soft fork. Let's say it's Schnorr signature. You haven't upgraded, so you're not aware of them. You could accept a signature that's invalid if some miners mined it, and your node wouldn't notice. So in deleting data, you want to make sure that something like that won't happen, and it's complicated. So I think it's, I don't think anybody disagrees that it would be nice to not store that stuff, not have to relay it, and the challenge is that when you find a block and you relay it to a full node, the full node won't consider it valid unless it receives all the data, verifies it. And so if you shortcut things, then you could accept something as valid that's actually not, once you see the data doesn't match what's hashed or something. So that maybe it's solvable. Let's hope so. I mean, you can participate in Bitcoin. It's sort of a little bit like, Bitcoin used to have much higher risk perception, like other sort of self-sovereignty peer-to-peer networks like Tor and Remailers, where you had to be careful running those. Somebody did something through your node, you could receive legal complaints, and there were people that had to get the EFF to try and build a legal defense for them. And so what would happen in peer-to-peer networks and file sharing as well is some people would say, well, I want the file sharing, but I don't want that risk. Some countries were pretty aggressive on trying to selectively prosecute just file sharing, music files and what have you. And some people would just leech, right? They'd run the node, receive the data, stream the stuff, but they wouldn't reshare it. They'd just be on leech mode. So you can do that with Bitcoin too, right? So it's another solution for people that are, a bit concerned about legal risk.
Yeah, well, Tim, I could talk to Adam all day, but I don't want to monopolize the whole show. I do want to ask you about maybe Blockstream Jade is a Bitcoin only solution, and I've made sure that I try to be Bitcoin only in every area of my life. So I won't own a cold storage device that's not Bitcoin only. I won't own a Bitcoin treasury, a treasury company that's not Bitcoin only. I don't buy them on exchanges that aren't Bitcoin only. And do you think there's any hope at all for some of these treasury companies that are trying to build on altcoins, or are they just doomed?
I mean, I think that they are bidding on the wrong horse. I think as we covered just a bit earlier in the conversation with Tim, that the Bitcoin market share or Bitcoin dominance is growing because the more professional institutional investors are value investors, long-term investors, and that story doesn't work for the altcoins because there's, I don't know, depending on how you count, I'm probably getting behind the times, but there was 30,000 coins and millions of meme coins. Maybe it's more by now, and that's fine for people that want to play in a casino and day trade them with leverage, but that's not what long-term investors do. So it seems like a pretty odd choice for a treasury company. But the regulators approve all kinds of high-risk things, right? You can buy double and triple leveraged stocks and indexes in ETF format, right? So it's not really a hard investability judgment for it to get approved. So people have to form their own opinion ultimately, but I certainly wouldn't buy them.
Yeah. Well, this was great for me. Tim, I'll turn it over back to you, but I think this is pretty cool. Like Adam, you're 1 degree of separation from Satoshi, and so that makes me 2 degrees of separation from Satoshi, and it's not going to get any. That's basically as close as I'll ever get to come. So this was wonderful talk. Appreciate your time.
Have you heard about the Bacon score?
Yeah.
Yeah, there's connections to Bacon, and there's an academic one called the Erdos score. So Paul Erdos was a famous mathematician, and he's not alive anymore, but people will try and work out, are they co-author a paper with somebody who co-authored a paper with Erdos, and then they have number 2, and they try and work out, so it's a kind of Kevin Bacon score for papers. So I guess, you could make one for Bitcoin, right?
There you go.
The Nakamoto score. Yeah, you developed a new idea there.
6 degrees of Nakamoto. I love it.
Mm-hmm.
Awesome. Thank you, Soleil. Great to see you. Thanks for co-hosting and asking questions. And we will see you on the Orange Pill Investor Podcast, which is your podcast, correct?
Yes, sir. I'll see you there, and I'll see you on True North.
And on True North. Awesome. Thanks, Soleil.
Thanks, Tim. Thanks, Adam.
Thanks.
All right, Adam, any closing thoughts before we wrap it up?
Well, I think we opened with the it's over and we're back
Yeah.
oscillation of sentiment. So
we're over 121,000 as we're on the live stream.
Oh, right.
So.
I haven't been looking. So well done. Yeah.
Yeah.
Right. So apparently we're back. And,
we're so back.
Maybe we'll get a new all-time high before the week's out or something. Yeah. So good times.
Awesome. Well, thank you so much. I'm going to turn this over to Ed, and he's going to chat with Garrett Johnston over at Marsh, and we'll continue the program here. Thanks, Adam.
Thanks.
All right. Garrett, how are you?
Good, Ed. How are you?
Fantastic. Tim is like the most spontaneous guy in the world. It's like I woke up this morning to, hey, we're doing a 10 a.m. with Adam back and then Garrett, and I had already gotten dressed, and I'm like, my suit wasn't ironed, and I'm like, okay, I'm gonna I'm going to be the only one without the orange tie, but at least you've got the polo on as well there.
I've got you covered. I'm on the road.
I
I got
know.
the text from Tim last night, so same thing. We just do things on this side. So
I know. I'm gonna have to keep a sport coat and a tie here in the office just as backup.
Yep.
But yeah, so you and I met a couple months ago in New York and went to lunch, and we're talking about insurance. I had worked with Bitcoin Conference before and tried to get some of the insurance companies like Marsh and Aon and IMA into the Bitcoin Conference, and they all told me the same thing that you told me at lunch that day, which is like, I can't sell it to my bosses, right? They just don't see it yet. Yep. And so you wanted to come to our event in New York and bring someone from your organization to show them. You were also fortunate to somehow get the only meeting with Saylor that whole day. I don't know how you pulled that off, because he said he didn't want to meet with anyone. He just wanted to be sitting out in the crowd. So I'm interested to hear what you thought of our event, what your coworker / boss, I don't know who it was, what they thought. Yep. And then tell us about that back green room meeting you had with Saylor. You know, how did he react to the insurance market and what Marsh has to offer?
Yeah. So for those who don't know me, I'll start with a quick 2-minute background. So I am 26 years in kind of the large corporate commercial space. That's all I've done. And then I went down kind of the Bitcoin rabbit hole in 2019, 2020. Most of my history on the insurance side is I started out as an underwriter, which that is the person at the insurance company that determines whether they're going to write the insurance, what the terms are, what the price is. And I did it in the financial services sector. So I would underwrite the directors and officers, any kind of errors and omissions, cyber, custody insurance for banks. And then in that role, I spent most of my time between LA and San Francisco. So I was very tech heavy at the same time. So I spent my time in tech, private equity, kind of all that kind of Silicon Valley quiet capital on the venture side. And that's really the world I was living in and have lived in for a long time as I kind of went down the Bitcoin rabbit hole. So for me, as soon as Saylor started purchasing in 2020, that really, really piqued my interest, because as a D&O underwriter, you are looking at essentially the same risk factors as a stock analyst, because the number one driver of a public company lawsuit is stock price volatility, which tech is volatile, and Bitcoin's volatile.
And what's D&O for listeners?
Oh yeah, that's directors and officers. So that is covering basically the suits alleging malpractice in the running of the business by the C-suite or the executive committee, right? So that is every public company basically, has to have that cover. Both, it's just prudent business from a governance standpoint, and once you're public, it's pretty hard to get seasoned directors or officers to join your board without a minimum of some level of directors and officers insurance. So that's the world I've lived in. And so, I think the important part is what I notice in this space, there is, as we've seen with the new administration, there was kind of this, we had an antagonistic prior administration and a lot of uncertainties about what the future from a regulatory standpoint looked like. And in the world that I live in, most of my clients are, Wall Street or the quiet money on the side that might be private equity, family offices, et cetera. And all of those institutional allocators, they are by nature cautious. So if there's regulatory uncertainty, they will sit on the sidelines because there is too much career risk on the downside if they make a bet and get it wrong on any fast growing industry. So I started in the business in 99. So the themes that I see in the Bitcoin treasury space are very, very similar to the .com runoff, the crash, and then kind of the aftermath of what all that looked like as companies are starting to figure out what does the future look like, right? And everything's clear in the rear view. Like Most of us, had we seen where the Mag 7 would emerge out of basically the ash heap of the dot-com bust, we would have all plowed our money into those 7 stocks and done quite well. But none of us would have been able to pick those stocks back in 2001, 2002. It seems like we're in very similar territory in that space in the Bitcoin treasury space, where I'm a huge believer in the thesis of the Bitcoin treasuries. And then there's going to be a natural first movers. There will, just like in tech, there will be mistakes made along the way and learnings and iterations as we go. And then, like most things, scale matters. The other space I spend a lot of time in is the like large sharing economy space. So whether that's like an Uber or DoorDash, these big sharing economy clients, and those went through very similar patterns 10, 15 years ago, going from 100 million revenue to a billion revenue in a couple of years, and all of the growing pains that come along with that. So on the insurance side, I get to see all the dirty laundry behind the scenes when lawsuits start flying and business models don't quite work out. Like, that is the world I primarily live in, because most lawsuits have some kind of insurance policy backing and payout. So the insurance companies come in after the train wreck from a corporate side. So that's kind of the context of where I come. And a lot of what I try to do is really intersect that very entrepreneurial, looking out 10 years growth trajectory that the Bitcoin community is so good at. And then marrying, as you go public, you're kind of starting to swim in institutional waters. People think very differently, and your risk and corporate governance needs and vectors change dramatically. So you're kind of graduating from one. The success you have on the scale is great, but then all these new risk vectors start coming into the mix because you frankly start becoming a target of the plaintiff's bar once you're public. And if you're a successful public company, the more money you have, the bigger the target is on your back. And again, most very large percentage of lawsuits are dismissed or settled out of court, and typically with no, admittance of wrongdoing. So there's a little bit, I sometimes call it, it's like white collar ambulance chasing is what you sometimes get into. And that is just, it's not right or wrong. It's just knowing that's the landscape you get into. So that's like my day job. I recently joined Marsh. So I joined Marsh in February of this year. And what truly attracted me was, you know, I think a lot of us that have grown up kind of in traditional roles and discover Bitcoin kind of figure out, like, what do I want to do? Do I want to get out of my traditional role and go into like the Bitcoin startup space, or do I want to stay in my traditional role and advocate and help bridge those two worlds together? So that's really kind of was my decision point, was stay in the large insurance side, where Marsh is truly unique. So taking my insurance hat off and my Bitcoin hat on, Marsh is 90,000 people worldwide, 130 countries. They own Mercer Investments, which is the single largest global investment consultant, bigger than BlackRock, 17 trillion under advisory. And we also have Oliver Wyman, which is like McKinsey, like a large global consulting firm. So I sit in the insurance silo, but I get to my number one role of what I would love to do is I would love to be in a situation if I can leave 10, 15 years down the road and having helped be a conduit to kind of orange pill a company with as broad a reach as like a BlackRock. That's really where kind of the Bitcoiner, like, what's my role for Bitcoin, comes into my job. So in that context, Marsh already writes, just about every Wall Street bank that touches Treasury. Uh, Marsh already handles most of the very large clients out there in the Bitcoin Treasury space. Just because we're the biggest player, gravity kind of works that way. So, um, full disclosure, MicroStrategy is a long-term client of Marsh. I've been a shareholder of MicroStrategy since 2021. So in that context, I've gotten to know people within the firm, and then ultimately started with some introductions with Fong at the CEO level, and then I had reached out to him prior to the event you guys put on, saying, "Hey, I know Michael's coming. The Marsh headquarters happens to be in Midtown, about 10 minutes from where the conference happened." And I said, if there's an interest in Michael meeting any of our senior executives who all are in New York, would be more than happy to do the conduit. So that was the precedent of the meeting. So I don't give myself, honestly, a whole lot of credit other than I'm a conduit to a 17 trillion investment consultant,
Yeah.
and that Mercer Investments piece, they're not there yet as far as, BlackRock's base case is, call it 2 to 3% portfolio allocation to Bitcoin. Mercer Investments isn't there yet, but they are the consultant that most pension funds, most sovereigns, and most very large capital allocators use as like an outsourced third-party due diligence investment consultant. So that it serves two things. It's a nice funnel to get Bitcoin adoption. For anybody, all of us that follow this space, we probably all follow, Strategy's story, and like their products are very, very attractive. There's an education gap of they've got fantastic products, both on the common and the pref, for these large capital allocators, right? And there's just kind of an awareness gap of the use case for that. So, one of my common experiences still is once you get outside of the Bitcoin space, Bitcoin Twitter, and I talk to seasoned people that are like investment allocators, it's very common for me to just be like, have you ever heard of MicroStrategy? And get a no. Have you ever heard of Michael Saylor? Never heard of the guy, right?
Yeah.
So sometimes it doesn't feel like we're that early yet or still in the Bitcoin space, but as soon as you get out into traditional markets and traditional capital markets, um, it's so early. So that really, like, my intersection with you and Tim and some of the other platforms of just getting um, the word out is that, Bitcoin companies that go public or have any kind of um, institutional infrastructure, even like, Adam's firm having the hardware wallets, like there are custody issues around that. There are product liability, there are cyber, risk attack vectors that come into that side of the business. They all need insurance products to wrap around, because insurance just simply acts as part of the financial lubrication of the system, like they're backstops to when things go wrong. And you know, on the flip side, insurance companies desperately need Bitcoin because most insurance companies collect premiums, right? They hold
Yep.
on to that money until the claim is made, or stuff needs to be taken out. And that's called the float. And they primarily invest that in treasuries and bonds, right? And so there's this pervasive issue of they're also trying to deal with all this money coming in that they have to hold on to as a fiduciary, right? To have claims ready to pay out on the back end. And they need Bitcoin to help manage that inflation pressure that's in their business model.
Yeah. Hey, we do
Um,
have to wrap up here in about 2 minutes with a half
okay.
hour.
So
For a short while, I was in the GRC world, and it was always shocking at how many CEOs said, "What's GRC?" That's just governance risk and control.
Yeah.
Sam Bankman-Fried had never heard the phrase. He probably still doesn't know what it is.
Yeah. So I'll give you just the TLDR on my visit with Saylor. So that's where I approached, was saying, hey, I can be a conduit, kind of a Bitcoin maxi within a large global consulting firm that doesn't quite get it yet. How can I help connect the dots and get people like him, or like a Matt Cole, or some of these kind of maybe traditional folks who've become Bitcoiners? Um, and I would say the takeaway that I took from that meeting, one, as we all know, like Michael's just incredibly gracious with his time, right? Very willing to help. What his message to me was, so like when we were putting in the framework of when you're talking to Fortune 250 companies that are large, established, been around a long time, um, you you have to kind of get consensus from the top down. Building consensus from, say, middle management to upper management, kind of that second and third tier right below the CEO, his general takeaway was you can have 100 meetings over a year with executive vice presidents, and like that's right below the CFO CEO. But if the CEO does not get it, or there's too much career risk in their mind to do it, you're dead in the water. So his kind of message to me was, get me a meeting with your global CEO and I will fly out and I will meet with him one-on-one. Right. So that was fantastic and typical Michael. Right. But on the flip side, he's like, you're wasting your time and you're wasting my time if we try to go for that second or third tier, which is not exactly what I expected, but like typical Michael, once you walk away, you're like, yeah, the guy's right. Right.
Yeah.
So that, I think that's the journey. Is it is really hard. And it goes back to that concept of there's more downside risk to taking a bet and getting things wrong than getting things right and 10x, 100x, 1000x your business. And if you're the CEO of JP Morgan and Bank of America, Marsh, like you're already doing pretty well. You get back to that same concept of, Michael discovered Bitcoin because he needed Bitcoin.
Yeah.
Right. If you're ripping up or you've got a nice, I'd say most of traditional finance, they've been successful. So they're much more oriented to like they've built a moat and they're in moat protection mode. They're not in what can I do to 100x my company over the next
That's
10
why
years.
I've been calling Bitcoin as CEO bonus insurance. They just don't know it yet, right?
They don't know it yet. And and
It,
particularly when their compensation is so heavily tied to stock price.
yeah.
That's also like Michael's answer is like you need to get to that CEO who has the most personally to gain if the stock 100x's.
If it works out.
Right.
Well, we got to jump.
All right.
I'm not sure if Tim is back there, but if you leave and I leave, it'll just all end. But thanks for joining us, Garrett, and we'll be in touch soon.
Happy to, Ed. Okay, take care.
Thanks, Tim. That was very impromptu. I woke up this morning to you telling me we're going to do this. So
Yeah, I'm actually going to bring on for a few minutes Dan Hillary, see what the latest is with him, and then
I'll jump to this other call.
Okay. All right. Thanks, Ed.
man.
Dan Hillary, CIO of Stravera Capital. How are you this morning? I like that vest.
Thanks, Tim. I'm a finance bro at heart, I guess.
You make it look good. So, right? We should all be so stylish.
How are you doing? What's new with you?
Just hanging out at PubKey with the cast of characters. Last night it was Thomas on stage interviewing Adam Back, and just have some randos in the audience like Jeff Park, some others. So no, definitely a cool New York scene with PubKey. I know we just have a few minutes today, but I wanted to make sure we kind of checked in with you, and if you could just give us a little bit of any updates or what's going on your end as far as Stravera and overall, so that
Sure.
I just try to not drop any balls as the bull run has taken us back up to 121 grand or so.
It's insane, isn't it? It's crazy how fast these things move. I think people really forget what it's like to make those kind of explosive moves to the upside. And, obviously we're in the space, Tim, talking to companies we advise, talking to people who are interested in Bitcoin. I think like hearing their perspective, you really see the kind of the zest taken out of their opinions about Bitcoin as we've chopped for so long. And then once it starts moving, everyone gets rallied back, gets all excited again. And from my perspective, like looking at the options market all day, and IBIT, MSTR, all the different Bitcoin derivatives, you see the same sort of sentiment and positioning in the options chain. Like the probabilities of any sort of move over the next year fall to really, really low, almost single digit numbers if you get, far enough away from the current spot price. Like when we were at 109, chopping between 109, 110, 112, the options market was just discounting any sort of movement, both the upside or the downside. And so I think people are just kind of like that. They're very instinctual. It's like the price is just going to trade in this range forever. But we know as Bitcoiners, like that's not the case, and that's not usually how it behaves. So there's just so many opportunities, I think, for people who are thinking different and willing to have kind of the conviction / courage necessary to be like, no, I don't think we're going to stay at 110 for the next 4 years. So I'm psyched. We're making money. you're making money. Everyone's making money. It's back to being kind of an exciting time. So I think now the next big shift is kind of the macro shift. Like what does running the economy hot mean? Where are the cracks in the equities market? Where are the cracks in the capex spend? 50% of new revenue of revenue growth in 2025 across S&P 500 companies was some form downstream effect of AI. So kind of, is that going to slow? Will there be a glut? Those are the questions I'm trying to answer, because that will reflect in kind of the Bitcoin market if the equities markets take a hit. But for the time being, I think we're in a bull market, and you have to treat it like a bull market. So I'm still positioned long. I mean, we've got our call spreads, throughout the end of the year, looking out into 26, really trying to figure out what sorts of rate cuts are being priced in. Obviously, the market's pricing in about 3 rate cuts, but before Q1 26. I think there's a likelihood that there will be more, and that's kind of an upside surprise shock that people aren't considering. So I'll release a couple pieces on that. But I mean, Tim, like, things look pretty good. Lots of blue sky between here and the next 3 months for Bitcoin. So
Awesome. Where can people reach out to you to learn more, connect?
Yeah, my Twitter's at Hillary, HILLERY _Dan. The link to the hedge funds in my description, cerveracapital.com. But all my research is published for free. Performance and newsletters are on the website. There's a lot of people who just want that information, and they don't want to invest. And that's totally fine. I hope you follow along, and we can all make a couple bucks here together.
Awesome. Well, Dan, thanks for joining us, and we look forward to having you back as we continue this digital conference series in Bitcoin Treasuries land.
Awesome.
especially between now and the end of the year. I think it's going to be a lot of fun to follow along and be a part of it.
I think so. Yeah.
Awesome. Thanks, Dan.
Talk soon, Tim. Bye.
Thanks, everyone, for joining. I'm Tim Kotzman. This has been the Bitcoin Treasuries Digital Conference for October. Hard to believe it's only October 3rd, or that it's already October 3rd. Can take either side of that coin. Follow along on X